Hey everyone, welcome back to the channel. Today we're diving deep into some really exciting updates about Chainlink and then taking another deep, honest look at what's happening in the crypto markets. There's a ton to cover and I want to make sure we dig into all the details. So let's get started with Chainlink because what's happening there right now is genuinely super fascinating. Before we dive into it, please subscribe, that would help so much, and yeah, I'll see you in a second. We all know that Chainlink has been a powerhouse in the blockchain space for a while now. If you're new to it, here's a quick rundown. Chainlink is a decentralized Oracle network that connects smart contracts to real-world data, making blockchains way more useful for things like finance, supply chains, insurance, you name it. But lately, they've really been pushing the envelope even further. And a big part of that story revolves around their co-founder Sergey Nazarov, as you all probably know. Right now, as we speak, Sergey is in Washington D.C. and he's not just there to grab a coffee and take a selfie at the Lincoln Memorial. He's there in some high-stake conversation with policymakers, financial regulators, and some of the biggest names in the government to discuss how US policy on blockchain technology can drive innovation in the financial system. Just yesterday, on February 26th, Chainlink hosted an invite-only event in Washington, and Sergey was front and center, sitting down like the big boss he is, with Representative Brian Steele, who chairs the House Subcommittee on Digital Assets, Financial Technology and Inclusion. They were having a really serious discussion about blockchains and specifically Chainlink's technology and how it could modernize the US financial system. That's a really big deal. Because when we talk about crypto going mainstream, it's meetings like this that lay the groundwork for real institutional adoption. Sergey has also been meeting with Congressman Tom Emmer, who's been one of the loudest voices in favor of pro-crypto policies, as well as Bo Hines, who's part of the executive branch. And what's really interesting is a shift in tone in Sergey's seeing. He said publicly that policymakers are far more engaged than they were a couple of years ago. They're asking the right questions about tokenization, cross-chain finance, and how Chainlink's cross-chain interoperability protocol, or CCIP, could make global markets more efficient. So let's take a second and think about a very realistic future where real-world assets like stocks, bonds, real estate, maybe even government-issued currencies are tokenized on-chain. All of that needs Chainlink, with its decentralized Oracle network, to see that all of this operates in a secure, transparent, and reliable way. Sergey's meetings are setting the stage for a world where blockchain and traditional finance all merge into one. And if the US government starts backing this movement, the domino effect could be really massive. We already know that Sergey has a lot of connections in the White House, so let's definitely keep an eye out. So while the crypto markets might be struggling right now, Chainlink is playing the long game. And this brings us to the other half of today's video, the current state of the crypto market. Alright, let's pivot and talk about the elephant in the room. The crypto market has been brutal lately, and I don't want to sugarcoat it. As of today, February 27, Bitcoin is sitting around 86,000, which doesn't sound too bad until you realize it was just over 100,000 just a couple of, weeks ago. It's not just Bitcoin, altcoins are getting absolutely crushed. Ethereum is down about 15% this week, and we're talking losses of 30, 40, even 50% on some of the smaller altcoins in just a few weeks. The total market cap of crypto is dropped back to around 2.86 trillion, a sharp decline from the peak that we saw earlier this year or late last year. So what's causing this slump? Well, it's a mix of things. First, the macro environment is very rough. Central banks are still raising interest rates to fight inflation, and that's just sucking liquidity out of riskier assets like crypto. On top of that, we've got economic uncertainty, supply chain issues, energy costs, and geopolitical tensions. They're all making investors very nervous. And let's be real, when institutional investors get nervous, they start selling off their riskiest holdings first. That includes crypto. Then there's regulations, which, let's be honest, is a mess right now. The US SEC is different from the last administration, but there's still a lot of work to be done. Meme coins haven't done good to the crypto industry, and we have yet to recover from some major fiascos like the Bybit hack. Europe is also tightening its grip with the new MiCA compliance laws, and China is also keeping its crypto ban in place while Hong Kong tries to position itself as a Web3 hub. This kind of mixed messaging keeps investors on edge, and uncertainty always leads to sell-offs. Now let's talk about liquidations, because those were pretty brutal. We saw 1.5 billion in liquidations a few days ago after the Bybit hack, which was the largest long liquidation since 2023 when Bitcoin was below 30,000. When we see that kind of forced selling, it creates a domino effect, prices drop, people panic, more liquidations happen, and the cycle repeats. This is exactly what we've been seeing. So the big question now, is the bull market over, or is this just a correction before we see another leg up? Now, this could very well be a healthy correction. Every bull market has at least 20 to 30% dips before the real next leg up, and Bitcoin could very well recover mid-2025, especially if we see some good news from the US administration or some ETF approvals. So where do I land on this? Honestly, I don't think the bull market is dead. You could of course argue that it's on life support. We've seen crypto bounce back up from worse, like 2018. And of course, everyone thought that it was over. Just a few hours later, 2021 happened. Now, I'm not saying that it will take a few years to recover. Again, this could be a very healthy dip. I'm still very bullish. I still believe we're just in a normal schedule and we'll bounce back. But that's just my opinion. This is definitely not financial advice. Do with this what you want. But I want to see your opinion. What do you think? Are you still buying the dip, or are you sitting this one out? Let me know in the comments. I want to hear your take. Thank you so much for watching, and as always, please stay safe, stay informed, and I'll catch you in the next video. Take care.